All right. Okay, so we do it again for the Thursday. Okay. Thursday, first of all, now how to trade the New York session. Okay, New York setup. I'm telling you the tip here. So we just go to your time zone and then just draw everything. Okay, first of all, this one here. What is this? OSS. Just mark this as first. The second step is you mark down the Asian close. Okay. Okay. Asian close, which is AC. Okay. And then we have what? London Open. Okay. And then we have what? New York Open. Now you will see how things will become clear. Now, what do I see here? A very simple step. Just follow the overnight session. We don't need to follow the bias here. All we need to do is to follow this, what's happening during the overnight session to make sense where the price would go during the NY session. All right, the highest point here is this one, right? Right? And the
Yes.
and the lowest point is this one. Okay. Okay, we just mark it as what? Overnight high. Okay, we mark it as what? Overnight low. Okay. Okay. All right. And now we have overnight low. What do we see during the overnight session? We are in a range. And then what do we see here? The price is making what? Some kind of VCP pattern, right? So what information do we have? We have a VCP pattern formation. All right. At this point here, we have a very high volume. So this becomes buying climax. Sorry, buying climax, right? All right. So we have a bearish bias here. And then we have a VCP pattern here. So what does this tell you? Just give me a rough overview. What does this tell you? What's going on here in this entire range, between OH
It
and
will
OL?
be bearish.
Hmm?
The bias will be bearish.
Bearish, yeah. Very easy to identify. What did I see? What did I see? That we have a high volume and BC, right? You can see we have this one, huge increase in spread. You can see huge increase in spread. First condition, you can see volume, buying climax, and then what do I see? Lower highs, lower highs, lower highs, VCP pattern formation. These two things, this thing they view that this is a distribution. Okay, this whole structure is distribution, right? That's it. Once this whole is distribution, when we break through this OL, when we break through this OL, what do we notice here? This is what? This whole entire move here.
FTI.
Okay.
Reading.
Sorry?
FTI.
Yes,
and
FTI.
distribution.
FTI, right? This is the first FTI attempt. And then after the price went back and then what found what?
RBI.
LPSY. RBI. Okay. And we also call it as LPSY. Last point of supply. All right. And then the price again continued the FTI, right? So this whole move we can consider it as an FTI, right? And then, of course, now the New York opens right over here. Before the New York opens, okay, just go, just see when does the New York open, okay, and see 1 hour before what's going on here. I see that the price is making a range here, right? Because it opens at 20. So at here, once I see here what the price is doing, just 15 to 20 minutes before it, I see this kind of range, right? The price moves up, moves down, then moving up, then you can draw this range like this. Understand? And this becomes what? Redistribution range. Okay. Now you go to the 3-minute time frame, 5-minute time frame if you want to refine it, 3-minute time frame if you want to see what's going on a, like if you want to define it. 3 minutes, you can just go for the entry here. And as I told you, within the range, what do I see here? Okay, obviously you can draw the channel here. So immediate bias would be bullish. And once we enter and region this here, okay. So you see if I just draw from here to here. Okay, this is the first major point. Second major point from here. Okay, the point is if I draw the channel from here to here. Why I'm drawing the channel from here to here? Because this is already low, right? Because we are already in a downtrend. So we can just draw the channel right over here. Understand?
Yes.
Now you would say, oh, this why we do not draw from this point? Okay, we can draw from this point here. Why? Because we are already in a downtrend now in an FTI move, right? So we can see that there is lower high, lower high, lower high. So this is not the first lower high actually, according to this whole move, right? So we can draw the structure. Either way, we can also draw from here, but this one and this one seems very, very near, right? So the best point would be draw from here to here. All right. And then just make it to the top side. Now, what do we notice here? Once we are here, what do we notice here? The price just made what? Connecting this one and this one, sorry. Okay. So this is what? Oversold here, right? And the price just increase in volume, right? You can see. And then after that, what do we see? A price is ranging a bit. Understand? Now, this one is also an entry point. You can also take an entry. Now, the point is where to place our stop loss. Okay. If you place stop loss right over here, you will get hit. That's a problem.
Yeah, actually, my mistake was this one for this week.
This one?
Yeah.
Yeah, this was your mistake. But the point is, we are already in what? Okay. If you draw this range, we are in what, right? We have a jump across the creek face, right? JAC. After JAC, what I told you, the price will range, and during the range, the price can whipsaw you out. Okay. So what do you see? It's not advisable just to trade near the range. Okay. Now we have a fixed point here. Okay. Swing highs, swing lows are already marked. Okay. And then what do we see here? Okay. As I told you, why I cannot take this entry here. Reason? Why? Because it's also rejected from the upside. So it will come and test back with this region here. You can see. No supply. Now this is a perfect entry. Okay. Now you see. You can take this trade additionally. If you don't want to take this trade, as I told you, the major bias is what?
Bearish.
Bearish, right? So you have to take this trade. All right. This is a major bias, right? And if you draw the channel from here to here as well. Okay, what do you see? The price became overbought and then came back here, right? Okay, it just reversed here. So whole the move is up thrust. This whole move is up thrust, right? Up thrust move. Up thrust is completed. All right. Now the price would come back and test it. Okay, the test is formation. The test is already done over here. In just one move, the testing is done, right? You can see over here. So in this way, once the price broke out of this, the price will not test this region. The price will stay away, will fall down. Okay.
Okay.
If we have this kind of move, for example, if we have one bar right over here on the top and then reversed, went down, then we would wait for the test of the bar. Okay, the price would come back and test this region. All right. But here, yes, you can see the testing is already performed here. Okay. And what kind of bar is this? Went up, fell down, and then this kind of is effortless no result, right? The testing is already performed here and up thrust. And then once the price breaks through this channel, okay, and forms a up thrust, the major up thrust, the price will continue to fall down. No more testing required. Okay, placing a stop loss right over here. That's it. Simple. Because our major bias is bearish, okay, it will fall down. and we can just hold the trade to the most upside. Okay.
Yep.
Okay, and now we are have an FTI. Okay, obviously at 9 o'clock your time. Where is 9 o'clock? Okay, what do we see? What do we see here? We are breaking this channel here. All right. We have a bound here. We break this channel here, and again, the price will come back, and then the price we just fell down. Okay. So how would you take this entry? Normally, what I would do, I would wait for the price to make some sort of channel here. Right. So the price makes the first reaction here, and then the price just fell down here. Okay. And I want this, either I want a test of this region or I want some kind of redistribution structure. Right? But we don't have a redistribution structure here. We don't have highs and lows, and the price just did not work this way, and the price just break out, right? So we did not get any entry opportunity right over here. But how about this one? When the price breaks through this channel, this major structure, this becomes our entry point. Understand? Okay, our last high is this one. As you can see, this last high. Place a stop loss right over here, and then go all the way down to. Okay.
Yeah. Okay.
All right. And then what happens again? The price again goes up here. Okay. And what do we notice here? The price again makes what?
Uptrust.
Hmm?
Is it uptrust?
Yeah, of course. And if I just mark this line here, because I also have this line here, now you'll see how it makes sense here. Because if this is our major point here, right? Where this becomes this one, overbought. And this is would be what? Our major AR, right? And then the price just fell down. Okay. The price tested this region as first, and then now the price tested its AR line. Can you see?
Yeah.
Okay. And we have what? What do we have here? Hidden upthrust. So we can take the trade to the downside. Here, why we did not enter over here?
High volume.
High volume. We have high volume. Okay. But there's nothing special about it. Okay. So you see high spread, high volume. Low spread. Okay. Little bit low spread. The volume is decreased. Okay. And then there is a no demand. Then why did not we enter over here? Right over here. We have this reference line, right?
Yeah.
Then what would you say about this one?
Not sure. Don't
Hmm?
know. No.
Not sure. Okay. Now just see this part here. Okay. The price has already acted upon this in the first part, right? Okay. And the price moved down. All right. And what do we see here? We see the price make down, and then the price make one low, another low, another low. Okay. The price is making low. Now, obviously, if you just stayed away this one, right? Okay, this shows, okay, the price should move in a very, very significant way. Now, what are we seeing here? The price is increasing on a very huge volume. Can you see?
Yeah.
The price is moving on a very huge volume. All right. And then once this was tested here, okay, the next time, okay, for example, if this is LPSY, okay, either the price will drop below it, okay, and keep on going down. If the price is to be retested again, okay, now obviously this kind of candle came because of news. Okay. So what I'm trying to say, that if you have this kind of trade here, if you have this kind of volume here, okay, and we see that the first time this LPSY has been tested, the second time, okay, the second time it will not be tested like this, okay, it will either form an upthrust of this one, the first part, okay, an upthrust, or it will form, or it will test the next reference line. Do you understand? Okay, let me explain you. For example, we have this chart here. Okay. Okay. For example, the price breakdown tested this region the second time, for first time. All right. And then the price went down. And then suddenly the price came back again up to the upside. Okay. Now, the second time it will not test the exact region because it has already been tested. So what I would do, it will either make an upthrust of this one. Okay. What's an upthrust here? It will make an upthrust of this one, upthrust of this region. Like this, upthrust, or it will fall down. All right. Or it will test the next reference level. For example, if there is a reference level, then it will test it. Got it?
Okay.
Okay. This is the point I want to explain here. I think I've told you about this before as well. Okay, the price does not test this region 2 times, right? So what happens if we can just find an upthrust here? Okay, we wait for the upthrust here. You see the price, if you draw this line here, this structure, we went through an upthrust here and then the price fails here. If you take this trade here, many people will take it, you will just have an additional loss. Got it? And you can make back in the next trade. All right. If you take this trade here, where would be our stop loss? Now our stop loss would be to this side. Do you think we need such kind of stop loss?
No.
Right. So what happens here? It's just 0.98. Yes, it will go down, and you will say many people hold it to the downside, and it does hit your 2R later on. But this is the real stop loss, because if you're taking this trade here, okay, if you're taking this trade here, this one here, all right, our major stop loss would be, okay, from here, from this point here. All right, the price came down here, tested this region, and now we have this one complete move. Okay, now we are waiting for this one, right? So obviously, if you just place your trade right over here, your SL would be too huge here. Okay, how would the SL be huge? Okay, if you don't place your stop loss here, okay, with this is the same level here. We can't place it. Okay, we can't place it. So our next level of swing high is this one, right? If you are here, because this level and this level are same. All right, this
Yeah.
would be our next swing high. And you can see that in this part, this would be our SL, the next swing high. Okay. So what you can do, if you see any kind of AR here, for example, if this is this one, we see AR, we can place a stop loss above AR as well to reduce our distance, and then we can go for 2R trade. But again, we will not get an optimal entry. Okay, so in this point, what should you do? Now consider this as one whole move. Okay. Consider this as one whole move, falling through wise, right?
Yep.
right? After falling through ice, we are testing this region. So what I noticed, what you did, okay, you just took this trade right over here, okay, and you consider it as a falling, okay, you said, okay, this is falling through ice. Falling through ice is just not one candle. The falling through ice, you will see multiple candles to the downside and then test it over here. Okay.
Okay.
Yeah. So this is a mistake which you usually do. Okay. So we have this one here. Okay. So our best entry would be, okay, as I told you that this is what our best, and because we are already in a very narrow range, if you can see, right? We are already in a very narrow range. This would be our best entry, and we see if we have a swing high. Yes, we have a swing high, we can place a trade right over here. This would be our best entry. Okay. And now the price would come back and retest this region. Now, just tell me, where does the actual falling through ice occurred? It occurred right over here, or it occurred right over here? Can you tell me? Which was the actual point where the falling through ice actually occurred? The first move.
The at the New York Open.
Why?
Yeah, the
Because
post.
why? Because you see here. Can you see? This was actual when the falling through ice occurred. So we just make this line as a dotted one. So what I wanted to tell you that, okay, this is a mistake. Okay, which many people do. We don't mark the microstructure because we have this range as well, right? This channel as well. If we just remove this, let's suppose this is the last one. Now, did you see it? Okay, what is this? Buying climax plus overbought, and then what's next here? The price came down. Okay, what do we have here? AR, right? AR, correct?
Yeah.
And then what it is? The price just fell down. This is FTI. The FTI actually occurred right over here. So which would be the reference point? Is this a reference point, or this one is a reference which is of much more significance? This is the reference point which is of much more significance because of higher volume in FTI. Okay, let me show you again in the last one as well. Now you see here at this point, huge volume occurred, right?
Yeah.
Okay, this is the main point of FTI. And what happened? The price came back here. You can see the price came back here, tested this region, and then fell down. Got it? This reference line. So we have to see. So for FTI and JAC, we have to see the high volume context line. Understand?
Yeah, correct.
Got it? Okay. Hello? Are you there?
Yeah, yeah.
Okay. Now, if this is selling climax, this is this one. Okay. Now just consider this one. Selling climax, right? Now I will tell you a trick here. Selling climax. All right. So this would be AR. Now this, you see increase in volume. Increase in volume. This occurs at what point? After AR. Now this is the point where I would take my trade. Understand? See this line?
Yeah.
Got it?
Okay.
The airline.
Yeah.
This is a line of significance. Okay. Again, see high volume breakdown, and then the price came back at this line. This is a line where there was a falling through ice, huge volume. The price came back to this region. Now just see it in the past as well. Here. This is if we have this selling climax mini structure. All right. What do we have? Spring. Okay. Now where would be our main one? Okay, the spring occurred over here. This is our main one, right? The highest point here. Now what happens here? I think this was a point where you took your trade, right? Remember?
Yeah.
Right? So what happened here? The price moved through here. Which line the price moved through? And you see the volume as well. We should have a high volume break. But what happens here as the price breaks through this volume?
Volume is decreasing.
Yeah, volume is decreasing, right? We do not have enough conviction to this move. Okay, so this one is generally not a very strong FTI.
JAC.
Yeah, this is not a strong JAC because of this volume. You can see decreasing volume, right? We should have increasing volume, and then we will test this region to see how far we can go up. But what happens? The price went up, fell down, okay, and then what do we see? Key reversal. Can you see key reversal?
Yeah.
Okay. Now, once you see this key reversal, now should you take your trade at London Open? Either you should have taken your trade right over here, but this is not the right point to take the trade. You can see if this is FTI, but see the volume as well decreasing. So it means what happens? The price will just range and then will test. Even if it tested, it will not go so much up to the upside because this is not the very good, like what to say. This does not fulfill the criteria of JAC. Okay. Now, what do we see here? Where do we have key reversal here? The key reversal is from this side, very huge volume. Can you see? Very huge volume right over here. Effort versus no result, and then a key reversal, right?
Yeah.
Now, if you mark this level, this is your level of reference where you could take your trade if you want, because we have a very high volume, and then the price did what? The price reversed from here, right? At a key reversal. And we have a very huge volume here, effort versus no result. And now you see the price comes back and test this region with what? Effort versus no result. So trick number 2, when we don't have a JAC, okay, when we don't have a JAC, so either what do we want? Okay, we want this one range. For example, the JAC is not very good, right? Okay, we have a move here. So either we want a spring on a very huge volume and test a spring and then go up, all right? Or what do we want? We want a key, for example, the price will come down, okay, and then the price will form key reversal. Either the key reversal will be on the huge volume, or the previous bar before the key reversal will be effort versus no result. Then you can mark the line right over here. This becomes a new reference line. We'll come back and test this region. Understand?
Okay.
Okay. Any confusion?
No.
Okay. Now, why did I mark this line here? Can you tell me? This line here. Hello.
Yeah.
Okay. Now, there's another trick which you can also use, okay, which I've used in the past as well. Okay, the trick is when you see, okay, now just focus on the structure here. What do we have here? What do we have here? As I told you, from this side, we have accumulation, and when we draw the channel here, we have an overbought, right? Mini overbought, all right? And then we have this structure, right?
Yeah.
Okay. Once we have this structure during the London Open, okay, we broke through this channel. As I told you, this is not the JAC. Why this is not a JAC?
Decreasing volume.
Yeah, decreasing volume. So first thing first, right? You cannot mark it as a JAC. Now we don't have a JAC. We saw that the price is ranging. We have a spring here, huge volume. So obviously you should not enter right over here at this because there is no JAC. Got it? So you cannot draw the accumulation structure like this. For example, this one here and this one here. Got it? And then you say, okay, where to take. Got it? So at this point, the best thing is that you just take your, okay, this is an upstairs, this is the London Open. You can take your trade right over here at the London Open. This is the only opportunity you have. But now since we have no JAC, you cannot take the trade. Got it?
Yeah.
Okay. Sometimes I do take a trade on a very short-term bias, but I will not suggest you this. Okay. I just advise you to go with the structure. All right. So if you draw this kind of structure here, if you miss this trade, then the next trade you would find is over here. Now, as I already told you that we have what? We have a declining volume from this part, right? And we are already just, like forming this kind of range here, right? So this JAC has failed. When JAC has failed, what will it turn to? It will become what? Redistribution. Got it?
Yeah.
Okay, JAC has failed, it will become redistribution. Now, how would you draw the channel over here? Now, I'm just trying to explain you why did you take the entry right over here? Okay, how would you draw the channel right over here? You have this, you say this is JAC. This is not actually JAC. Okay, so we have no JAC. Now, how would you draw the channel over here? Now, last high, okay? Now, if we mark the range, this is the last range here, right? And of course, this is our low here. So this is a range, right?
Yeah.
Okay, this is a range. And what do we notice here? The price went up here again. And again, we have a declining volume, right? Okay.
Yeah, correct.
Okay, and then the price reversed here. And then after that, what do we see? This whole becomes upthrust here. Now, of course, we know that JAC has failed, so this will be distribution structure. So remember one point, whenever JAC failed, you have to. So don't take the trade midways, okay? You see the previous structure, how the price is moving. Okay, so there is no point you can take your trade over here. You take your trade right over here, just draw the, okay, this is JAC. This will kill you. Got it?
Okay.
So so what I'm trying to say, once you took this trade right over here, your entry was either here, somewhere here, okay? And your entry was also right over here. Meanwhile, I took this trade right over here on this one. Remember? At the London Open, because I observed the spring here. I did not take, because I saw that the volume is declining. I did not take the trade. So this is what you have to keep in mind. Okay. Now let's go for the Friday one. Okay. Now help me to mark the London session now. Okay. Let's start
We
quickly.
want to start the new session. It was 6 minutes.
Okay.